Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. National Financial Literacy Month is celebrated in April, which is a great opportunity for us to check and promote our financial situation and skills. Joining me for this segment, we have Natalie Campisi, home and mortgage expert at Forbes Advisor, a trusted destination for unbiased personal finance advice, news, and reviews to discuss the unforeseen costs of buying a home. Natalie, it's great to see you as always. Welcome back to Trade Talks.
It's terrific to be here. Thanks.
How many home buyers are new to buying a home in this market?
So right now, there are about 25% of new home buyers in this market as of, I think, January. I just read a recent report that came out a few weeks ago. And so we're seeing about, a quarter of home buyers are first-time buyers.
How much can the down payment impact the overall payment?
So the down payment is sort of key in your overall payment. If you can put 20% down, you can avoid something called private mortgage insurance, or PMI, which can raise the overall cost of borrowing. PMI can go up to 2% of the total purchase price. So that means you're adding about $200 to $300 on top of your monthly mortgage payment per month. So there's that. However, not many people don't have 20% to put down. So they will have to pay PMI. The good news is PMI can be worth it and can be a way for people to access home ownership. And it can, even with the $200, $300 extra per month, you can end up saving money over the long run, if rent continues to rise, which it is.
What are closing costs and how do you calculate them?
So closing costs are apart from your down payment, and they can run anywhere between 3 to 6% of the loan amount. So they're a pretty significant chunk of change for buyers. And closing costs will vary by lender. That's why it's so important to comparison shop. Lenders have different fees. So when you're out there applying for loans, make sure you shop around. Not only will lenders have different rates, but some lenders will end up, charging less than others. And when you do apply for loans, you'll get something called a loan estimate. And that estimate will break down all of your closing costs. So you can really see what lenders are charging. For example, some lenders will charge an application fee, which could, cost an extra $100, where others don't. Those little line items in the closing costs add up. So it's important to sort of comparison shop and look at those loan estimates to see what lenders are charging. One important strategy and something that can really save buyers money is to, let's say you get a lender who offers you a low interest rate, but their closing costs are higher. And, lender B has a higher interest rate, but lower closing costs. You can kind of, maybe take one estimate to the lender with a lower rate and see if they can match those closing costs to shave off some money, at the end of the process there.
And you had mentioned before a down payment. How do you show a seller that you're serious about buying the home?
So there are two ways to show sellers that you're serious about buying a home. One is to get the mortgage pre-approval. Nowadays, real estate agents won't even work with buyers who aren't pre-approved for a mortgage, and that's different from pre-qualifying. The pre-approval process is lengthier. You have to provide income statements, credit reports, all of that sort of thing. The second way is to put down some earnest money. The earnest money is basically showing the buyer that you're serious about buying the home, and it can cost anywhere between 1 to 3% of the total purchase price. So that could, depending on how much the home costs, that could be $10,000, let's say. And that money sits in escrow while you're kind of going through the mortgage approval process, through the appraisal process, the inspection process. And you and the seller, the buyer and the seller will have a contract with this earnest money. It's sort of like the money that's on the line. So if either of you break the contract for whatever reason, that earnest money can be lost. So let's say the buyer decides to back out of the loan for, because they just changed their mind, they could end up losing that earnest money. So that's one way, one important way that buyers can show sellers they're serious about buying the house.
Natalie, what do you think the biggest shocker for new home buyers is?
I think the biggest shocker are the closing costs. I think, a lot of times, especially new buyers, they really are focused on that down payment, which is such a big chunk of change, and it's the biggest barrier to home ownership. A lot of people don't have 20 grand sitting in a bank account, and I think that's shocking to a lot of buyers in this market. The other thing is the approval process. Not only do you have to have that down payment money, but you also have to have money in reserves to show the lender that, if something happens, let's say you lose your job or your wages are reduced for some reason, you can still afford that mortgage. So not only do you have to have the down payment and the closing costs in the bank, but now you also have to have extra money in reserves. So all of these costs really add up. Not to mention, sometimes, borrowers will be close to qualifying for a mortgage, but maybe they owe, they owe an old debt, $800 credit card charge off or something like that they have to pay in order to qualify. So these little costs really add up, and it's something that borrowers should consider when they go into the home buying process.
What about homeowners association fees?
Homeowners association fees can add up too. At closing, you often have to pay a transfer fee. It depends on the homeowners association. It could run anywhere between a few $100s to a few $1,000s. Not only do you have to pay that transfer fee, but you also have to pay the monthly homeowners association fees. And for some people, it's really worth it because HOA fees cover everything from sometimes lawn maintenance to a community pool to parks, those sort of things. And that can be great for some homeowners. For others, it can be an extra cost and sometimes an extra headache, because if you break the rules of a homeowners association covenant, you could end up paying a lot of money in penalties and things like that. So before you get into an HOA, really make sure you understand what you're getting into and that your budget can withstand those extra fees.
And then finally, Natalie, to wrap up here, as we hear more about rising interest rates, how can these costs change? Are they dependent on interest rates, or is it something that they're always going to be in flux and it really depends on market climate at that point in time?
Right. Yep. So closing costs are separate from interest rates, and those will, go up over time, incrementally, but they don't fluctuate the way interest rates fluctuate. So you can kind of count on closing costs to be around, 3 to 6% of the purchase price. I mean, that's a big fluctuation, and which is why it's so important to shop around for lenders, because there can be a big fluctuation in closing costs depending on the lender.
All right, Natalie, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.